Howdy, howdy, folks. Got another live coming to you hot. Howdy, howdy. Should get a bunch of people joining in here soon. I'll give it a few minutes. I've got an incredible guest on. Very, very similar individual to myself. An incredible. No, they're not. They're not. Absolutely not ready. It's so incredible. I've got an incredible guest. Somebody who is so similar to myself. So this is going to be such an incredible, informational, and fluid conversation for you guys. I am so excited to have this gentleman on, and he's going to be hopping in here soon. Are options worth the risk? They're worth the risk if you understand how to utilize them properly and conservatively. Here we go. Here's our guest. He's coming in here. GD Investments. GD. I love it. I love it. Get on in here. What's up, good sir? Look at that setup. That's gorgeous. Can you hear me?
What's going on?
Can you hear me, Beast?
I can.
All right. Well, that's one heck of a setup. That's a great background.
I wanted to change it up.
I like it. No, I like it. I think the only thing I got that beats it is this bad boy right here.
Of course.
Yes, sir. Yes. First of all, I just wanted to thank you so much for letting me have some of your time this evening. We've got a lot to talk about. We're very similar individuals, which is incredible. That's going to show for a great conversation, very fluid conversation. So what we're going to start out with, again, thank you so much for your time. But what I'd like to start out with is an introduction from you, if you don't mind. Just give us a little taste of who you are, explain a little bit about what it is you do, and what you got up on behind you, all them charts. What are you, a stock trader?
Yeah, man. So I've been stock trading for about 2 years now, and I wouldn't really preferably call myself a stock trader. I like to invest my money and strategically trade it. I'm not really a day trader, but I've been learning. It's part of the beauty of it. There's good ways to develop and move along, right? You can develop and find new skills at work, and that's the beauty of this thing too about like trading, is that you always find someone that has a different style. Everyone has a different style, and being part of Team Bull has helped me tremendously. All these guys trade differently, and it's really fun to watch.
That's awesome, and that's one of the reasons why I got an OBR, for example. I love speaking to people. I love getting to know people and learning about what it is that they do, especially if it correlates to what I do on a daily basis, which is what you and I were talking about just a little bit ago. You and I talked about shared mindset, shared strategy, long-term outlook, right? So in regards to tonight, which one of the greatest in the world is getting together in a community full of people that have similar goals and are equally driven and are moving to achieve what's in front of them and what they put in front of them. So in regards to a whole bunch of different things that I want to ask you and get chatting about, as an investor, as a trader, as somebody who participates in social media, what are some of the most important things that you have to either remind yourself or focus on a daily basis?
So, I think one thing being part of social media and really grinding 24/7 is that you don't realize how much you're doing in a short time. You don't really realize it, and you wake up and you're like, man, for me at least, I'm ambitious. I'm always trying to strive for more, and it's like I wake up and I'm like, I should have done more yesterday. I should have done more, and I do that consistently. But I do have times where I do reflect on what I've done, and I say, I've done a good job, and I just got to keep building off what I have. So that's one thing, right? I always do some self-reflection and, look at where, all the knowledge that I've, gained, and all of the good stuff that you get from, trying new things and really experiencing it. So, but in the trading and investing world as well, it's all about, for me, it's, a long-term outlook, right? A lot of people don't have that mindset to where they can really say, hey, I'm going to buy this stock and hold it for 5 years. I think that might be one of the hardest things possible. A lot of people just can't do that, especially I think what TikTok and like new social media has created is that this get rich quick type of thing. And also like, hey, we can options trade and make $300,000 like Wall Street Bets did in 5 seconds, which is possible. It's possible, right? This kid did it. You can do it, but it's hard. And, it's just not my style. And I like to do what I like to do, what I'm comfortable with. And If I could retire, with a couple $1 million by just putting my money in investments, I'm proud and I'm good with that.
I think that's an excellent perspective, and it's something that I hold very close to my own and to myself. For me, what I realized, because I told you I used to day trade, I used to scalp, I used to do temporary jobs, I used to find things that I felt like were going to be my temporary or my long-term fix. And what I realized is that I'm not looking for money. I'm not looking for a large income. What I'm looking for personally is freedom for myself, my loved ones, my family specifically, and the people that I care most about. And where that freedom comes from is having complete control of my time, having complete control of my time, able to do what it is that I want when I want with my time. And in today's society, obviously, there's a price tag attached to that. There's money that you have to have available in order to have that kind of freedom. So I could not agree with you more. That is such an incredible perspective to share. And if we're going to share anything with the 100+ people that are in here, it's that you guys have to find out how to become consistent rather than lucky.
Absolutely.
Right? Luck's not far.
Absolutely. And being a part of Team Bull, right? I see so many great traders be consistent and be profitable, but everyone has their own strategy. And I tell this to everyone. It doesn't matter how much you learn, you have to apply it and you have to find what works for you. What works for me isn't what works for you. So we all find our own strategies. And what I have found personally is that equity, long-term plays, swings, buying, averaging, cost averaging down, cost averaging up, those type of plays and those type of movements are what I like to do, and it works for me.
I think that's excellent. I think it really shows the difference in maturity between somebody who's getting into the stock game and thinks they're going to be able to make a couple dollars very quickly versus someone who understands that this is now going to be a major asset class for you as long as you have done your due diligence, you work with the right people, and you have put in the time and effort, you've paid your tuition, right? So for me, it's so incredible to be able to talk to somebody like you because I agree wholeheartedly. What I wanted is the leverage with the long-term annual compounding growth.
Right.
So figure out a way for me that works best for me.
Yeah.
Match leverage with equity, match leverage with long-term movement, match leverage with annualized, relatively consistent growth within hopefully a decent or a tight range. So talking about the long-term, it's incredible. In regards to some of the more specifics, if people are interested in long-term trading, you mentioned equities. What specifically are you looking for when you're dollar cost averaging down and up? What are you looking for in that metric?
So I look for a few things, and especially with this type of strategy, it takes time. You need patience. So, obviously you need to scale in and scale out properly. With that becomes very, very mindset worthy. You have to have the right mindset to be doing it. But what I look for basically is, obviously I want a good deal. I basically buy large cap stocks, maybe smaller, depending on if they have some type of catalyst or news. I like to play news and I like to play catalyst as well. Like upcoming, I would look for like month out, 2 months out, certain stuff like that I would look at. And also, I also play stocks, with lower equity plays, but I also play, stocks that have more eyes, like AMC, for example. Now I know it's a meme stock, whatever, but when I see eyes like that and you see volume and you see that type of stuff, I can't ignore it, right? I can't ignore it, especially when it was at, I purchased AMC at $4, so plenty of no risk involved, really. I mean, the way it went, but I like playing with a lot of eyes of different strategies. But if I were to break it down like very, very strictly, I would look at large cap stocks, primarily stocks that fall into the S&P 500. Then I would go look what's on sale, what has a deal. 3 weeks ago, I purchased a lot of energy and oil sector, and they performed extremely well over the last couple of weeks. Right. And not that I knew that, but when you see a kind of a sector heating up, that's when I like to scale in too. you can really see it and feel it. And there was a lot of news about oil and energy and what was going on. So, you know, scale in, you know, when I say scale in the long-term position, it could really, really be different, right? So, you know, when I say scale on a longer term, I would say maybe you wait another month to put more money in. Maybe you wait a week. Primarily, if I'm holding it for, I know, like 2 to 3 to 5 years, I'll scale into that thing, and you know, maybe a different year, maybe a different couple months, depending on how we're trading and what range we're at.
So in regards to keeping everything organized, because the biggest part of this long term is truly patience. And I would say the second part of it is
Absolutely.
organization. Are you more concentrated with your longer term positions, equities, holdings, so that you can keep them more easily organized so that you can also leverage more? Or are you pretty well diverse with your long term investments?
So what I found out was that I went for a high diverse portfolio at first when I was starting out, and what I found was that it really wasn't that great of a you know, way to do things, because one thing I've learned is that being too diverse isn't good. It's never good, because that limits you, and that will limit your capital, one, and two, that will limit you know, how much percent you can make or lose, right? So I mean, it does help you out in a certain standpoint of maybe losing capital, but it's not really that big of a deal, and you're not going to make that much money. So I like to do my research heavily, and you know, select a few that I think are going to be good, and I repeat that process. And so one strategy that I found actually works for me: I don't hold cash. Everything's in the market. I don't hold any cash besides. And that's something that not a lot of people ever talk about. A lot of people like cash. I don't hold any cash. All my cash that I have goes right into the S&P 500. When I make profits, what I do is I allocate that right into the S&P 500, no matter what price, because I've been buying for 2 years now. So I put it in the S&P 500, and I just average that every time. And now, say if I want capital, what I'll do is I've been investing for 2 years. I have you know, I'm up a decent amount on my S&P 500 position, so I can, you know, sell some, use that as cash if I want to. If not, you know, I can put it into other things. And what I've done with my long-term strategies that not a lot of people talk about either is that when I make my money, I do not let it sit. When I make my money, I first max out my Roth IRA as fast as possible. I max out my Roth every single year. So with my profits that I make in the stock market with my long-term strategy, they go right into my Roth IRA. If I can max that thing out first week, I would. So I go right into the Roth IRA, and through the Roth IRA, I have a couple long-term growth stocks that I believe that could do really well, and I also hold you know, some ETFs that will secure me some gains for the long term, because obviously you can't cash that out until you retire at 60. But that right there, if you're starting at the age of 20, man, that's gonna compound to some large money by the time you retire. Are you there?
You you've covered a tremendous amount. You've covered so many different things that are so unbelievably important, and a lot of different strategies that I utilize myself. The biggest and the largest rotation of my capital is into SPY, and I've gotten to a point where I know SPY well enough on a year over year basis that I choose leverage, right? And I choose leverage only when the circumstance that I am looking for, the perfect circumstance and situation and opening and opportunity, presents itself. I do not take on additional risk to go outside my parameters. I don't take on additional risk to make an extra couple dollars on my return. Everything's very methodical, as it seems to be for you as well, for me. So
Absolutely.
I think that's unbelievable. Your strategy of allocating profit into ETFs and SPY specifically, SPY's my baby. And if you heard of any of my live streams or any of the content I've created, SPY is my most heavily traded ETF that I've got, and it's also my heaviest leveraged, because I keep cash on hand in case anything were to move the market down to a point where I can't say no to buying. Other than that, everything's rotating and cycling into the S&P 500 and specifically. So I love it.
Absolutely.
I really
And
do.
you know, something that I did just buy, which is a little controversial, is Facebook. And I know a lot of people. I know a lot of people. You know, I bashed on me for it, but I like bad news. In fact, especially on a major company, I love bad news, and I'll take it all day. So when I see that bad news and I see it sell off, I just want a little more. I want a little more sell off, and then I pick it up. I scale in a little bit and see where we go. And it had a nice. I picked it up. I'm already up in my position now. You know, I had a good day. I think today actually pulled back a decent amount. So hopefully we see more red. I want more. So what we're trying to say here is that, you know, sometimes it's good to buy when others are fearful. Maybe this case it could go down and I could be wrong. It's 100%. Nothing's proven. But with a major company like that has, you know, I mean, phenomenal company, and it will be around for a long time. So I feel confident enough that if I hold that for a few years and keep buying the dips, you know, keep scaling in, I think I'll be good with it.
Well, just to put your mind at ease a little bit, I'm sure as hell not going to make fun of you. I did the same damn thing. I've been legging into Facebook since it broke down past the 360 mark.
Yep.
So I've got a large amount of Facebook at the moment, and it's a heavy position in my portfolio. That being, these positions are out to December, January, February. I've got equity, which never expires. So
Right.
I am in no way disturbed. I utilize credit spreads like I told you. So theta is only going to make me money. So if we saw a little bit more red, all that's going to do is eat my contracts up when it recovers in a couple of months. So,
Right.
and we've seen, you and I as long-term investors, you've seen Facebook deal with this crap before. This is not the first rodeo.
Absolutely.
This is not the
Absolutely. Yeah,
Go ahead,
and
sorry.
you know, companies deal with these type of problems all the time. You see all these, you know, they can get short reports. They can get anything. Anything can happen with them. You know, I love, like, I remember Tesla not too long ago. Like, I don't know how long it was, but they had a recall in their car. Like, oh, freak out, whatever. That is the best time. I love that because that really just presents opportunity. Just you know, it's really crazy because one of the first things I've learned coming into the market, my dad's an old school investor. He didn't really, he knows some about the market, but, like, you know, he knows the basics. And the first thing that I was taught as an investor was, you know, never sell, just buy more. And that might seem not the best strategy, but in reality, it works. It works. And I don't think using my long-term strategy, I really don't believe I've lost on many plays. If just to be real, I don't think I'm lost on many. So,
well, that's excellent. That's the same for me. The longer I go out, the higher probability I have of whatever underlying mega cap stock that I like to trade is going to go up. It's going to appreciate value. So
right.
if you're doing, you have no expiration. If you're doing
no expiration,
yeah. If you're doing leveraged, then you need to make sure you have parameters around it because there is an expiration, regardless of how well you prepare yourself. So, for me,
right.
when you and I are probably the happiest in the reddest of months, I would assume.
Absolutely.
So,
absolutely. But it does get tough though, right? Because when you hold long-term positions, especially with equity, you know, if you're going, say, you know, a year ago, I was really growth-based because all growth was flying. And so I was growth-based, and then we had a couple months where growth hit, you know, went pretty bad, and you know, my portfolio took a big hit. Now, what makes an experienced trader or investor good is that what they do here is that they don't panic. They add certain points of their position, and they hold and be patient because that's what's in the long run. That 1 month isn't going to reflect 2 years, 3 years down the road on these solid companies. That's not going to reflect. So having that mindset of, hey, it's only 1 month out of a year. It's, you know, this short-term period of time will not last 5 years on the road.
It's music to my ears. I love talking to you because I could not agree with you more. I love to hear different perspectives, and you and I trade long-term, but we have very different perspectives on how we trade. So absolutely agree with buying more as things fall. I love when people start getting scared of the cash on hand ready to go, because that's when I know when the investor confidence comes back in the market in the short term. That's when all my long-term positions are in so much of a comfortable profit that I could probably sit for the next 3 months and not even care about my portfolio because I know we're okay. So
Yeah.
I think that's incredible. And we've only got about 7 more minutes, so I'd love to get some final bits from you, whatever it is that you'd like to provide to both of our platforms, which I'm so appreciative of you for coming on to ours. And then I'd like to take questions for the last couple of minutes, but I'd like to give you the floor for as much as I can.
Yeah, I mean, I got nothing much to say, man. I really appreciate you having me on here, and part of my journey with Team Bull, and has been amazing. And yeah, I mean, what you guys are creating at OBR is amazing as well. So keep up the good work, and we're gonna keep doing our thing and keep evolving.
No, I thank you so much for that. It's extremely kind, and I'm very much looking forward to having you back on here so that we can cover some more technicals or be a little bit more
Absolutely.
specific. Guys, this conversation that we've had today, a lot of information that will help you mature as a trader. That's what I try to do with these live calls, and that's why the wonderful people that I have on, which I'm so appreciative of, we're able to share a certain amount of information that will hopefully be able to cut a very massive learning curve that this gentleman and I have absolutely had to deal with ourselves, so for the most part independently. So it's I'm trying to provide as much information to you all as possible. Both of us, I know, are happy to take as many questions as possible. You guys got his Instagram, you've got mine, you've got OBR, you've got his platform. So whatever it is we can do to help, we're here for you. We care about you guys. We care about the platforms that we're on. And I know I'm speaking for this gentleman a little bit, but I know he agrees with me.
No,
So,
I 100% agree with you, man. So I'm happy to take any questions or anything.
Well, yes, sir. We still got a bunch. You're in here and you were able to stay through the entirety of our talk, which thank you so much if you were. Please ask some questions, throw some questions our way. We're both happy to answer anything we can. We've got a lot of people still joining back in right at the end of this. Guys, if you're watching and you've got any questions, throw them in. Speak now or forever hold your peace, please. See if we can get anything. And let me scroll up to see if we got anything above that we missed, because I know there's a bunch that came in. Okay, so from Investor PTY 26, he said, "Hey guys, would you mind sharing your long-term portfolio just for people who are learning to create, I guess, their own long-term portfolio, and we can share. We could go over some of the equity that we have, ETFs, what we prefer. We did a little bit of that already, but
you broke up there, but I did
hear
hear you say about long term. If you're shooting for long term and want to build a portfolio, it all depends on what type of capital you have. One, and two, you need to look at your goals and be realistic. So if you want to go for high growth, you're going to go into sectors that are high growth. You're going to look at cannabis. You're going to look at electric vehicle. You're going to look at technology. You're going to look at those type of sectors to be more high growth, more aggressive. And if you want to downplay that and be more safe, you could go into ETFs. You could go into dividends. You could go into more value stocks. I'm a big guy also in the financial space, in consumer brands. All that stuff's great. You just have to find out what type of diversity you want so you can really apply that, and it all depends on your personal goal.
I think that's excellent. I couldn't have said it better myself. What I will add to that is, guys, for long term, for me, the only thing, I'm not growth, I'm not value. The only thing I care about is consistency. So there are sectors that rotate in and out. There are ETFs that do well sometimes. There's triple leveraged ETFs, etc. My favorite position, both to leverage and to hold equity in long term, and there's branches from this, but it's the S&P 500. These are the best 500 companies in the country, in our country, and year over year, the S&P 500 does about 7 to 20%, right? So that means we're doing well year over year over year. I've developed for myself as a way to leverage that, so that growth becomes 30, 60, 70, 80% what it is that it's already producing. And the way that I've done that, I leverage in options and I go very long term, and I'm buying a 3% pullback, 2%. September, we had a little over a 6%. I was buying through every 1.5%. And when the market recovers, every single one of those positions leveraged, credit spreads, long, right? And that's how I get my percentage annually. And I'm completely fine with at all times deploying capital into what I know is almost untouchable. And if we crash, I've got cash on the sidelines, and I'll go just as beforehand. So I'm prepared for it to go sky high or it to fall from the sky. So that's how I manage my long term. And then I pair that with Vanguards, VOO, VGT, VO. I love them. VTI, I've got no problem. And I leverage the Vanguards. I do long-term options with the Vanguards on major pullbacks. And it's outperforming everything else I can find. Apple, Facebook, any of the individual tech stuff. I know that was a long spiel, but I want to cover a couple more questions. But that's how I run it. And I haven't found anything right now for me that.
Hey, man, like we said, when you find your strategy and you find what works for you, you do it, and it's really a great feeling, having that one strategy where you can really do it and feel confident.
Yeah, I agree wholeheartedly. See if we can take a couple more questions. All right, well, you got a great compliment. Team Bull is awesome. Money-making machine. I'm hearing that. That's freaking awesome.
We do our best, man, for sure. For sure.
Well, I know you guys do. So what else we got? Biggest tips for traders who know what they are doing but are struggling to become profitable. Would you like to take that one first?
Oh, yeah. If you're struggling to become profitable, just remain small. Remain small. Don't just because if you have, say, like a winning day or a winning week, don't scale your size up. Keep the same position, and keep trying, keep doing it. And make sure you find that consistency. Now, if you're still struggling, remaining small, we can go back to watching. Kind of watch, maybe not less than applying. Watch, maybe go. You have tools all around you. Go watch YouTube. Go watch what other people are doing. Maybe you have to adjust your strategy. Maybe try it with, your fake money, or something like that. But if you're struggling, I think it's really important just to keep a good mindset and just know it takes time. People that day trade in general, take years to figure out how to make money. So it's a very tough gig. You just have to be mentally willing to keep pushing and figure it out.
I agree with that more again. So the thing that I would say is, guys, find one or two stocks that you're very comfortable with that do very well year over year over year, and paper trade them. And paper trade them so that you are confident with what it is you're deploying, any real capital, and there's nothing spending your time to educate yourself, right? And it's a free lose in the market. I take losses. I got hit very hard when the energy market and the growth market got hit, right? I was in a lot of that, and I'm not really happy that it got hit because that pissed me off. So we take losses and we learn, but there's ways to make sure you're not deploying anything that you cannot afford to lose. If you're in equity, you really can't lose if you're trading incredible, upper 500 companies, top 10 holdings, XLF, SPY, etc. Can't lose. You look at the charts, see how these companies are performing annually, play accordingly. And the biggest thing that my man here added is that it takes time to learn how to do this. You have to spend thousands of hours in the market watching how it responds to news, to even begin to understand when to position yourself and how to position yourself accordingly. So it takes time, right? A doctor goes to school for a long free. You guys want to make 6 figures in the first month of your trading. It's not going to happen. Question. Yep. Small losses can lead to big gains. Absolutely. So our platforms, the floor is yours. Other than
Absolutely. You're breaking up a little bit, but I can hear you, but you're breaking up just a little bit. Yeah, we
can
had
you
an
hear me
incredible
okay?
call. Yeah, I can hear you. It's just very choppy, but I can definitely hear you. We had a great call, and I think if this can help, and if anyone can take any value from this, that's really what we're doing this for. And yeah.
Appreciate you coming on. I appreciate your time. And I'm sorry for the lag and the issues that we're having right now with connection. But thank you so much for sharing everything. You've provided such an unbelievable amount of applicable information, which I hope everybody's going to be able to take from this call and directly apply into their own lives, both through mindset, long-term investing, trading, discipline, etc. We've covered a lot. And I cannot wait to have you on again. And I can't wait to talk to you soon because we do
Absolutely,
have some.
man. I'm super excited. We could keep going with this, go further into detail on how we plan and how we trade and all that good stuff. So I'm super excited. You guys are amazing and keep doing good work, man.
You are as well. Unquestionably, you are as well. So thank you so much for your time again. You have a wonderful evening. We'll talk soon, all right?
All right. Have a good one.
Appreciate you, Beast.
I appreciate you, man.